You're not having a good day. And this is the purview of the CME, and its head, Terry Duffy, is here to explain. You guys make money either way. When it goes up, volatility is good. Right. But as you were saying during the break, your stomach would rest a lot easier, I guess, if you didn't have these churns, right?
Well, you don't want to have too much volatility, Neil. I mean, obviously that chases people out of the market completely because they're waiting for some kind of certainty one way or another. And when you look at just at the Fed alone, the Fed has been very confusing in and of itself about what they're going to do with rates. They gave a projection.
Is that how all this started?
Well, I think it's a big part of it because it doesn't go back to just last week when they didn't do anything. This goes back over the last couple of years when they said they wanted to see certain factors happen in the market economically before they moved rates and started to tighten. Those things all started to happen for the most part over the last 24 months.
So they drew their own line in the sand and they didn't honor it.
That's the way I see it, and I think that's confused the marketplace. So this time, come October, they don't do it because of all the other underlying factors. And again, I think that causes more volatility, and the market went the other way. So
I'm surprised a lot of that money, Terry, didn't park its way into things like gold or silver or any of that stuff. The reason why I make a note of it here, this is the 20th time this year the Dow has swooned more than 200 points on a day.
Right.
For all of last year, we didn't see that.
Right.
What is going on?
Well, I think, again, there's uncertainty. The markets hate uncertainty. They like to have some kind of a vision that they think can go on for the next several years, and we're not seeing that, whether it's at the government level or the growth in the United States. Here's a great example. I testified just a couple months ago about the export of oil in this country and to lift that ban. There's a gentleman by the name of Mr. Ham that believes that we could add 1% to GDP if we do that, just by lifting the export of oil.
But isn't that Congress that's blocking it?
It is Congress's block, and the president said he won't support it. Now, there's certain things like that are uncertain. Well, you could lift and help build the economy by making a few smart decisions. We're not doing it. So whether it's in business or at the government level, I think that's impeding the progress.
I always get the feeling this is a market that doesn't want just a correction, it wants a bear market. So if you're down 12% from your highs, it really wants to be down 20%. And since so many stocks are in bear market territory, it wants to complete that for that ultimate cleansing. Well, what do you make of that?
Well, what I make of it is a lot of people miss the rally. So when you miss a rally, though, you don't want to buy the highs, and you're hoping for a break in the market so you can get back in. So if you look at the volumes over the last 24 months in stocks, they've been basically anemic throughout this rally, which means people have missed it. So, of course, they want a bear market so they can go ahead and get back in it, because you cannot make any money in fixed income. So now you have participants in fixed income are in the market that should be in fixed income, and conversely doing the opposite. So it's a very dicey situation where the market could go right now, and most people are looking professionally for it to go down so they can get back in because of what they missed.
Isn't it weird, though, if you think about it, Terry, that people would run to treasuries where the yield is almost nothing because they want to protect what they have, which makes sense, obviously. But that could be the underlying underpinning of an improvement, right? Because that translates into lower mortgage rates. We've already got lower gas prices. Do you think that is setting the seeds for turnaround right there?
I think the gas price has made a bigger impact in this economy than anybody's given it credit for.
I agree with you.
The crude oil was trading at $92 a barrel for almost 3 straight years, and then it went in half. That, every single week, people use that product to go to the gas station to put gas in their car, and they got half their money back. That's disposable income that they never had before that goes to everybody, not just on an interest rate play, but on something they have to use every single week. That was more powerful for the economy than the economy's given it credit for.
Do you buy, there's a Pope indicator? Did you know that?
A Pope indicator?
There's like the Super Bowl indicator and all that. The Pope indicator is largely when a Pope is in the United States. This will be the 4th one in the United States. And it's hard to judge with Pope John Paul II because he came here so many times, I think 7 times. Right. We count just the times you meet with a U.S. president. So he met 4 times with the president. So we average those visits, then we average all the way back to Pope Paul VI. The market goes up when popes are in town. So why isn't that happening so far?
Well, as a good Catholic that I am, the day's not over. The Pope is only in D.C. When he gets to New York, maybe we'll have a rally.
So by that time you will. But this Pope is not a fan of capitalism. I don't think he's saying he's not a fan of yours or the CME.
No.
But maybe this is an early reflection of a little bit of lecturing that he's going to give.
Well, I think that's part of the problem. People feel that he's going to lecture, and capitalism is what's built this country. Financial services are what helps our national security, and the Pope has the religion to run and economics not to run. So I think that's why people get a little take offense to it.
Well, 10 Hail Marys, young man, I can't believe you said that about the Pope.
They don't start. You're the one to start on the Pope,
Mr. Duffy.
You said Jesus was here. I didn't see him.
Well, we did. This guy was a double for Jesus, but it turns out, I guess, he was not Jesus. But thank you very, very much. Good seeing you again, my friend.
My pleasure.